I'll ask you all to introduce yourselves if you could. So you'd like to start, Joel?
Sure, I'm Joel. I'm based out in Stockholm. I work for Ventec. Ventec is a European-based VC firm with headquarters in Paris. We invest in seed and Series A in fast-growing tech companies.
Great.
Great. I'm Nahoko. I'm an investor at the SoftBank Vision Fund. I'm based in London, covering the European market. We're a global growth and late-stage fund.
Hi everyone, my name's Sam Nasrolahi and I'm a principal at InMotion Ventures. In InMotion Ventures, we're the VC of Jaguar Land Rover, set up in 2016, and we focus on 3 core verticals: enterprise software, industrial tech, and climate. We're predominantly a seed to Series A fund with tickets ranging from 200k to £2 million, covering UK, Europe, US, and Israel, and I'm based in London as well.
Fantastic. And I know you've all got slightly different investment theses according to the way you're structured. Do you maybe want to share a little bit about those? I know you've sort of started that off, Louise, as a CVC.
Yeah, of course. So I guess kind of like coming from the investment perspective from my side, and I've had a bit of a varied background, kind of jumping around different types of roles, from corporate to venture to kind of startups as well. I think for me, kind of understanding the product is really important, but really understanding the go-to-market, the distribution, understanding and knowing the founder's understanding of that kind of market in terms of customer pain points, the purchasing behavior of that customer, whether there's a budget line for something which they're selling. I think all of that is really, really important. And due to our background as being a CVC, we're quite fortunate that we have access to those enterprises. We have access to JLR and a number of kind of different companies within the kind of Tata umbrella, which we can kind of validate a lot of that stuff with and kind of understand if the pain point is kind of really there, and 2, what are all the processes and structures and things to think about around that.
Fantastic.
So we're naturally very excited about the opportunity in AI. That has been our founder, Masa Son's, his vision from the very beginning. He's been a very early believer of the AI revolution since 2016 or so, when he first started the Vision Fund. So at the Vision Fund today, our core investment thesis is still around AI. We look for anything from the infrastructure layer to the application layer. We're looking for tech companies that can leverage AI to disrupt existing companies, existing industries, and also create new ones. The recent investments that we've done in Perplexity and OpenAI and Poolside, you can see that we're very focused on following the developments in Gen AI. It has been one of our focus areas, and we continue to do a bit more investments in that field.
Great. And Joel?
Yes, I'd like to echo AI. So I think we had 4 big trends. We had the internet, then we had mobile, cloud, and now AI. We're a 25-year-old fund. We invest in generational companies, and also with a caveat, of course, that they should be able to grow fast. And we look for, to do that, we look for, there has to be innovation in the market or in the product, and the team has to have a competitive advantage to deliver the solution to that kind of a new market being created. So those are the things we look for.
Yeah, I mean, this is an area where there's a lot of hype. There's a lot of people saying things they're going to do. How do you assess, what makes a good startup in the space? I mean, how do you evaluate their potential, given this is such a fast-paced, high-growth sector? Maybe you could start, Sam. You might have some ideas.
Yeah, I mean, I think I really touched on some of the points already in terms of the things that we really look at. I think technology is evolving so incredibly quickly at the moment, and obviously that's a really core part of what we look at within companies. But as I said, it's really all the stuff around it, which I think is really important to assess in terms of the distribution, how the founders are thinking about longer-term competitive advantage, what their kind of unique understanding point is, and kind of thinking about it a little bit more holistically so you don't get caught up into the hype.
Yeah, I'll definitely second what Sam said. I mean, regardless of the industry, regardless of the vertical that they're in, I think the themes that we look into investing is quite common. It's usually, I guess you'll probably have the same, but a strong management team, a large addressable market, whether you have a clear strategy for sustainable and scalable growth, all of that really matter. But maybe in addition to that, what we look for is really the fit between the founding teams. and us, because we try to add that special value into all the investments that we do, and it can be anything from like providing access to our big ecosystem, which is consisting of 450 plus portfolio companies, finding those organic synergies or inducing some, and also access to new markets. We always like to take European companies to the US markets, the Asian markets. We have a network that would enable us to do that. So, some sort of value add that we try to look for in those investments.
And it sounds like it's a really strong advantage having an international focus beyond Europe, for that matter.
Absolutely.
Yeah, totally. And a question for you, Joel. I mean, we know with enterprise AI, there's a lot of people that are trialing their products for their customers. But I mean, one thing that always comes up for me is how can we expect those early stage startups to maintain those customers and build those relationships further within companies, and not be worried by that next incumbent startup with the next shiny thing that might do what they do, but a bit more?
That's a great question. So we've seen some indications that management teams or boards are fast tracking AI purchases. So that's something startups should be aware of. So to plan accordingly, are the contracts, are they going to get renewed? In general, just in general terms, I'd say the couple of pointers. For example, when you're selling to larger customers, they're likely more sticky. They have more advanced procurement procedures. They have more training required. So you want to sell to larger customers if you can. You want to sell to many users, and you also want, if you can get the customer's data into your platform and provide integrations that the customer requires, that also makes the product more sticky. You have some solutions that require workflows. You can get the customer's workflows defined in your solution. That also makes the product more sticky. In commercial terms, you can think of the startup can provide multi-year contracts against discounts, for example, to try to get the customers more sticky. But you really have to understand how your customers are using your product and the value you provide.
Yeah, that's a big task. Very ambitious. And Nahoko, I know SoftBank Vision Fund, it's obviously international. It's got lots of reach globally, obviously. What attracts you to Europe? And are there standouts in, I guess, the European startup scene that attracts you as a fund?
Sure. So I've been with the team just looking at European investments since 2019. So it's been more than 6 years now. And as a team, we've been always excited about Europe because of the very robust and unique startup ecosystem that's here. We found incredible businesses like the Arms and the Revoluts and the Klarnas and the Totals, like they're all blooming right now. Yeah. But throughout the years, what we realized is that continuously there is a generation of global talent that's getting incubated locally. So it can be the local universities, the tech universities that's helping with that trend, but also global talent. The people who have started their careers in a DeepMind or Google or Meta in the US, they're all flowing back to Europe to start their own businesses. And because of that, there's an abundance of global talent, especially in machine learning at a slightly lower cost base, but definitely at the same par with the US talent, right? So that makes Europe as a very attractive ground for new startups to bloom. The other thing that I would also mention is not so talked about is Europe's focus on data privacy. I think it's definitely an advantage. So that's why we continue to see Europe as a very attractive market, maybe slightly cheaper in terms of valuation than the US. I think the trend is still there. But yes, we're seeing more and more deals happening this year. We have taken more opportunities to investment committee this year. We're excited about the pipeline. So there's a lot more vibe and momentum here in Europe.
Exciting. Good to hear. And Sam, I mean, we talk about, obviously, with B2B space, things like procurement and buying cycles. How can startups better understand these corporate buyers and purchasing processes?
I think it's really kind of doing the diligence upfront as a founder in terms of who you're really selling to. I think sometimes there can be a bit of a mismatch between what the founder is selling, what the VC is excited by, and what is really top of mind for enterprises. I think because of all the technological advancements that there is within AI, I think there's a big buzz towards solving very forward-looking problems or kind of looking at use cases which perhaps weren't there before. But actually, there's a huge opportunity within solving the kind of big existing problems which are already there. So just understanding a little bit where you sit, I think is really important. So understanding how many corporate buyers need to be involved within a purchasing decision. As I said, if the budget line is kind of already there, and just really doing that due diligence upfront to understand what is going to be that process for me to get to the customer and then to retain them.
For sure, absolutely. Joel, did you have anything you wanted to add to that?
No.
No, it's okay. Yeah. Great. Nahoko, like we know SoftBank obviously investing in some of the biggest companies in the world, you know, the unicorns. Are there any lessons that you can share that would benefit our European startups and scale-ups?
Lessons for European startups. I think, I mean, there are several, but to name a few, maybe for European companies, because we're talking about Europe as a consolidation of many different nations, many different cultures and languages and regulations. So being a European founder, you always have to look abroad from a very early stage. And I think you've seen a lot of success cases out of the Nordics where you cover, a lot from like Germany and France, because they are forced to look beyond their borders and start looking at ways to expand into the US markets and Asian markets. So that, I think, there has been a very strong trend already, but there still needs to be more improvement in that. I think the European regulators can play a role in making that easier. I think also, and maybe this is like a trend more into the future, is that consolidation will need to happen more. Because there's so many unicorns that have emerged from like early as 2020 and 2021. They're all looking for exit opportunities. I think all the investors are looking for exit opportunities, but there needs to be a way, because we cannot have all these IPOs happening. Of course, we're looking forward to IPO windows reopening this year or next year, and that's all very exciting. But I think we need to be a bit more creative and think about ways where we can manage those expectations, maybe through an M&A consolidation, maybe one of the idea, but just being a bit more flexible and agile.
Yeah, for sure. And Joel, how does Ventec approach, I guess, geography and diversification globally, I guess, across different regions, things like that?
Yeah, we have a distributed team, and it means we're very close to our entrepreneurs, and we have the feet on the ground, and we sit on the boards and we talk to them very frequently. It gives us many advantages. For example, when we see many companies emerging in different regions, we can easily say, okay, this company is similar to that. And what, one learning is that many markets require more local players, and they're not a winner takes it all markets. For example, accounting software, some ESG reporting tools we've seen. Typically, they're local players coming maybe having 10 million ARR, but then they cannot go quicker. So that's one learning that we have.
Yeah, absolutely. I guess a general question for everybody in the enterprise space: is there any particular tech or perhaps software that you think is kind of maybe it's early stage, or it's underinvested in, or it's underappreciated, that you're kind of watching the trends for? Maybe Sam, you might have some thoughts.
Yeah, sure. So I can probably speak tangibly to something that I'm looking into quite a bit at the moment, which is in the cybersecurity space. So in data loss prevention, not the sexiest of topics, but kind of speaks to a little bit what I was talking about those kind of big enduring problems that have been there for such a long time but haven't really been solved yet. So typically the kind of legacy players around this space, they take 1 to 2 years to actually implement, and because some of them are not particularly sophisticated in the way that they classify data security issues, security teams get thousands and thousands of false positives, sometimes up to 90%, which the security teams can't handle. to the extent which sometimes they just turn it off because they kind of can't handle the number of alerts, and also the level of friction that it creates in the organization when everything is being flagged, emails are being blocked, actions are being blocked. The correlation between high protection and high friction is really kind of there, whereas kind of new developments within AI and kind of cost-effective AI to scan the data, understand the business context and business sensitivity kind of around that data, and be better able to match internal and external identities to really see if what you think is a risk really is a risk, can really reduce those false positives and make platforms a lot more manageable. So I think that's one area that I'm looking into specifically at the moment, but I think there's a lot of kind of interesting areas which are under the radar within the cybersecurity space and enterprise infrastructure space as a whole.
Interesting. How about yourself, Nahoko?
Yeah, I mean, cybersecurity, definitely. We're big into that as well. Maybe personally, the one that I'm most curious about or interested in is workplace productivity. With having all these API plugins and integrations, there needs to be a way to consolidate all that workflow. And maybe it's the help of agentic models that might come in, but there needs to be a way where we have one stream of workflow and not hundreds of them. So I'm seeing a lot more consolidation happening in that space, but also new players emerging to solve that problem.
I can give one example that's a little bit special, and that's space. So you have the number of satellites is going to increase a lot in the coming years, being up in space, and you need software to manage all these satellites, which path they're going to go. And as soon as they move, they use energy, and the more energy they use, the shorter they can stay up in space. So I think that space is interesting, software to manage satellites. It also has a strong network effects.
That's such a good use case. It's not always one we'd think of, but it makes so much sense. Absolutely. I guess a final question. We've got just under 3 minutes. Do you want to maybe all tell us a little bit about a company in your portfolio that you are particularly, excited about or inspired by, or maybe it's an exit, maybe a little story, and maybe Sam, you could start with that if you may.
Yeah, sure. Although
Great.
I do feel like you're asking us to rate our favorite children. I'd say one that I can speak to quite well and one that we've been quite proud of is our enterprise investment into a company called Firefly. We invested in them, I think about this time last year, into their Series A. They're essentially a multi-cloud management tool to allow kind of enterprises who do have a multi-cloud infrastructure to really be able to scan, understand all their assets, and bring it all into a central kind of control pane to allow for better governance and compliance, and just kind of remediate a lot of technical issues which can happen when you have a lot of sprawl. So we've been really excited about how they've been doing. They've been growing really well. So if you're an enterprise with that problem, you should definitely look them up.
Fantastic.
Maybe quickly, one from Europe, which is Poolside. It's a Paris-based coding model.
I know the photo.
Yep, exactly. I think it's a good example of having a US groomed management team moving to Europe and finding talent here and trying to compete with the models of the world, trying to generate a model that fits the European culture. Basically what they're trying to do is to help enterprises build codes on their own system, own environment, without sending to the cloud, so they can keep control of all the codes that are written within the system. So I think it's a good example, and I'm rooting for it because it's a European company, and it's one of our investments, obviously, but the management team really understands the issues that they're tackling, and they're on the right route.
Fantastic.
And I'll mention an exit.
Yeah.
So last year we exited a music company called Believe in France. We returned 175 million euros to our investor for our 12% stake in that company. So I think that was very exciting for us and our investors.